So I'm delighted to introduce our three panelists. First of all, we have Manuel Reis, Managing Director of Banco Espírito Santo Angola, BESA, which is currently one of Angola's largest banks. He has been with the bank since 1996, and I'm hoping he can tell us a lot about project financing in Angola, which is going to be a big issue over the next 10 years. Next, we have Anthony Lopes Pinto, Managing Director of Imara Holdings, which is Imara Securities, in Angola, which is an investment banking and asset management group. He's been with the company for nearly 10 years now, and also worked for HSBC. And then finally, I'd like to introduce Miguel Vieira, the Managing Director of Elite International Careers. He was one of the founding members of this company as well. This is a London-based international recruitment consultancy specializing in emerging markets and also specializing in placing professionals in Angola. So I hope he can give us some insight also into the issues of the difficulty of finding skilled workers and how these are overcome. So if I could just start by asking the panelists just to give their initial statements, starting with Manuel Reis from BESA.
Okay, thanks, Edward. First of all, just I see your presentation, and I think you were hard on Angola, to be honest. I could follow your presentation and make some counter-arguments, but I just need to make 2 or 3 comments, and I'm sorry. Sure. Well, you presented as a million reasons why not to invest in Angola. Well, actually, we are seeing as a bank and as a local investor appetite from foreign investors in Angola still. So we should understand there are checks and balances. You have good reasons to invest in Angola and bad reasons to invest in Angola. At the same time, and you show us also, FDI is growing and is huge in Angola. And I must say it's not just oil-based. It's also non-oil oriented. If we went through the figures of ANIP, and ANIP accounts private investment out of oil, out of diamonds, out of banking, well, it grows 50% this year and it's 2 billion, so more than 25% of total FDI, which still is a huge value. If you take oil out of the equation and show that graphic again, it's still a huge level. And at the same time, South African companies are entering in the market and are happy with that. Well, the second point, you mentioned that the steam of reform every time oil prices go high. Well, that happens in all the countries, not just Angola. If everything goes fine and people try to forget the structural reforms they need to do, at least my country of origin lives that at this moment, Portugal. And that is especially the case in all countries. Well, the third point, like Pedro said, we have 30 years of war where you became dysfunctional, and now you have 8, not 9, 8 years of a growing economy. So you said a word that, you said a phrase, still much to be done. Well, much has been done already. And if you look at the deeper analysis, you see that IMF is believing that. You just had the second drawdown. And they are believing in the economy, they are believing in the structural changes that are being made, either on the regulation of the how to manage the foreign exchange rate, either on the new tax reform law that's going to be approved, on the constitution of the sovereign fund. Well, you have now the credit rating by S&P and by Fitch. So I think that more and more Angola is being credible at the eyes of international eyes. Last point, South Africa and Angola. Well, you mentioned also a story that I knew, realpolitik. The Cubans were making guard on the oil concessions of the Americans on the war times. Angola is a plateau for realpolitik. And you have winners, of course. You have Portuguese, which are very strong in Angola, Brazilian investors getting more and more strong in Angola, Chinese, because of what you mentioned, and I think there is room for South Africa, for sure. More and more, and even because of the recent developments, political developments that are taking place. But one word of advice, Angola needs to be comfortable with South Africans entering the market, but also they need to understand South African must understand that they also want to enter in South African market. So it must be a balanced relationship. And that will be a key issue for South Africa to be more successful in the market. And I believe that will happen. I'm sorry for these comments.
That's okay.
Okay. Well, my view here, I work for Espírito Santo Investment, is an investment bank from Grupo Espírito Santo. We are one of the major financial players in Angola. And we are there for 10 years already. And actually, we are getting ourselves constituted as a local financial group, not just a bank, but in the future a broker, in the future, presently an asset management company already. We are running investment funds already in Angola. We are trying to open new lines in products like leasing, factoring, insurance. That exists already, but we are also opening now an insurance company, and an investment bank. So our commitment is a strong commitment towards Angola, and we believe at Angola in the long term. At the same time, we also have non-financial operations going on in Angola, since it's traditional in the group, and I could say we have more than $700 million invested in Angola in capex, in a variety of sectors, non-financial sectors, which means that we are fully committed, to be honest, and we understand. And we believe and we buy Angola history. So that was I would like to stress at the first beginning.
Fine. Thank you very much. If we can move on to Anthony Lopes Pinto from Imara Holdings Angola.
Thank you. We took the big leap to enter Angola in 2009, really, but I had been looking at Angola previously for a year or two. Effectively, we are an investment banking group with a core focus on stockbroking, corporate finance, and asset management. And we currently have a footprint in 10 African countries. Angola will be the next country in which we penetrate and expand our franchise. Since I moved there in 2009, September, it's been just over a year. And we've been focusing on trying to improve the knowledge base about the companies that are investable, with a specific focus on the companies that we think will be listed on the BVDA. The sort of timeline for the opening of the stock market has been continually moved, and the latest with regards to that, we're expecting that we'll see some sort of movement in 2011. The oil minister most recently gave his prognosis as the opening to coincide with single-digit inflation, which we're a bit far from now. Inflation is now 16%. Following the oil price increase, there was an effective 22% increase in the oil price effected over a month ago, which has led to inflation in the economy. But we believe it's an achievable target, mostly on the back of recovered oil price stability and renewed positive prospects for that. With regards to looking at the sectors that we think will grow, which are apart from the oil and energy sector, we've looked specifically at several sectors in the economy, most specifically those which would be listable. The most obvious being the banking sector. Angola is probably one of, it's not the largest, but has parallels to the Nigerian banking sector, significant parallels at that. Total assets of 40 billion, and in 2009, profits of $1 billion were more than Nigeria. Nigeria made profits of about 500 million for, say, the top 15 listed banks. So from a profitability point of view, still very profitable, and profitable on the back of growth in the non-oil sector that we've seen. We've seen significant growth in the telecoms industry, which has a combined penetration of 6 million subscribers for Unitel, 3 million for Movistar, a country with a population of about 18.5 million. The latest sort of forecast for growth in telecoms are 14 million by 2012 subscribers. So it's probably a bit bullish. But with the